morning, Peter here on behalf of Global Market Signals. It's quarter end, exciting times, lots of crazy things happening in the markets, politics, the economy, everything. We're going to look at the gold silver ratio today, just so you can get a sense of where we're at with the gold silver ratio. Then we'll do another quick quarterly look at gold and silver. And just to show you where we are in the big picture, this is a quarterly chart of the gold silver ratio going back to the mid 70s. And of course, this ratio goes back 3,000 years, but I mean, charting wise, you don't get any of that on TradingView. You only can get that in very specific websites that sort of manually put that data together going back 3,000 years. However, I was writing all throughout 2018, 2019 that, breaking the 100 level on the gold silver ratio was critical. Let's just go to a monthly chart here. And we did break that. We broke out here back in March. And that would have been the all clear signal to buy gold equities. The target was about $1.30, $1.32 up here. We only ever reached 127, so I think that's it for that ship. That ship has sailed. So I think now we're into a reversal period where we're going to probably go down and test the all-time lows at 16 at some point. We're currently trading at 79. We had a quarterly close that was very healthy. So this green reversal candle on the monthly candle doesn't really mean anything at this point. We'll have to see how this next candle plays out the next month. But as you can see, if I overlay the gold mining index with this blue line, this day here where we topped out was in fact the all clear to buy the gold miners, and the gold mining index basically has doubled in the past 6 months once we topped out at 132. So that was the critical thing to watch, was the gold silver ratio, as I'd mentioned many times over the last year and a half. And so we've achieved that. Now we have to see what happens if we close in on the daily chart here. We could see this sort of happen, materialize kind of sideways on this gold silver ratio, and then we break down. And the critical sort of line in the sand, let's go to a weekly chart, it's just easier to see, will be sort of this 60, 70, probably these lows in here around 70. Once you break those, I think you're going down. Zoom out again. I think you're going down, and this move here could be quite significant between the sort of 70 down to 40, and maybe testing these lows from 2011, which were 30. I mean, historically, there's lots of precedent for this gold-silver ratio going down to the 15, 16 range. And this is simply just the price of gold divided by the price of silver, right? And this goes back into even Roman times. There's lots of precedent for the gold-silver ratio being between 15, 16, 20. If you listen to Jim Dines, one of the oldest technical newsletter writers on Wall Street, he says this will eventually go to 1 to 1, which seems kind of impossible, but you never know. Don't know when that's going to happen. If it does, it's probably a long ways out in the future, and we will certainly be living in a very different world at that point in time. So once again, just a quick review of silver here as to what happened here for quarter end. We're still maintaining this uptrend line. I actually did some Fibonacci work on this, and it's quite fascinating to see. This is a weekly chart of silver. From the bottom to the top, the retracement, 38.2% so far, beautiful, right to the trend line. As I said before, I think we could see correction back down into here, potentially, and then go. That's certainly a possibility, so we'll have to keep an eye out for that. We have lots of important dates coming up. On the big picture, monthly, we're still... we had these wonderful, this run was crazy, but the next target on silver is really $40. Between 37 and 40 would be the next target on the next bullish run, which we have to see what happens. It's possible. My feeling is it's possible we could get that in the first quarter of next year, and then we have to see where we're at, or we go down or sideways between now and the first quarter, and then the first quarter is an important timing date as well. On gold, same sort of thing. I mean, boy, we have this beautiful stair step higher. We're retracing. Let's do a 2-week chart of gold. You can see, look at these beautiful sort of steps, consolidation step. This is a steeper consolidation, which is fine. Into support, still, true support comes in 1780, 1750, 1800, 1823 was the previous high in 2011, so that could be important as well. But, once again, if you look at the CPI adjusted gold price, boy, this thing is very revealing in terms of, look at this, the high from 1980, then this high, 2011, now here. Fully expect this to break out, as gold accelerates higher through here, we'll get some inflation back into the system, which they keep telling us they're not. The Fed, of course, said that their target inflation, I think, was 2% or something, but it wasn't actually even revealed in any of their forecasts going out 5 years, which was, very revealing to where they think this whole thing is going. It's going to be free, silly money for the next, foreseeable future. And there's, one day that's going to change and interest rates will explode higher and this gold play will be over with. But for now, we can look to the future of hopefully some positive numbers here, but we have to wait till the election gets taken care of and we're out of that. CPI adjusted silver price is also very revealing. I mean, look, the high was roughly around $52 in 1980. We touched it again. We still haven't fulfilled this upside target here. Inflation adjusted, we're trading at $9.20 an ounce. The previous high was $50 an ounce. So essentially you have a 5-fold increase just to get back up to the highs, whereas with gold it's about a 40% increase to get back up to the inflation adjusted highs. So there's a tremendous tailwind for the gold mining, or for the silver miners here, once we get silver breaking out above this. So that's an important thing to keep into consideration. And then, of course, the gold miners, we'll go back into the GDX, which is the senior gold miners. This is in the U.S., of course. Looks like, we're within this channel. We've had a nice pullback. It's possible we set the next leg up for the next rally, which should take us up to about $60. GDXJ, which is the junior gold mining index, same sort of thing. Next target on a big move is going to be substantially higher here, probably into this $100 range, Fibonacci extension on it. First target would be certainly about 75, 76. These are all rising lines going out into the future, so those targets sort of move. This is the Toronto Stock Exchange gold index, same sort of thing. If we go on to a 2-week chart, we're still got this unfulfilled target here of 441. We're at 367. If we zoom right out onto a monthly chart, I mean, and we shrink this down, I mean, the target is really up here to sort of equal to this move up to 2011. So that takes us up to 543 from 367. So, that's an index with all of the gold and silver stocks. So that's, you should have some great outperforming stocks, smaller stocks anyway. So that's sort of where we're at. A quick review of gold. Any sort of, kind of kooky things that might come out in the woodwork after the election, or something happening. There's targets on the euro, which of course impact precious metals and commodities, targets on the US dollar, on the Dow. I'll do a separate video on those. So for now, trade safe and take care. Bye.